Alright, so in this video, I'm going to explain how exactly I hold my trade so that I get maximum profits, and how I trail my stops so that I don't let a trade go red. And I'll use this example right here. This is a play that I entered off personally. Right here, I got in at 934, stop loss down here, about 30 points, which is, I won't lie to you, it's a little wide, but I took it for the risk reward. It was great. It was a great reward. I was ultimately targeting this block right here, specifically the bottom, and here's how I held my trade. So we get in right here, and the first target is going to be the top of the block, or bottom of the block right there, sorry, the bottom. But if you guys want to be safe off an entry like that, you can use this candle low right here, or candle high, sorry, candle high, because that's what we look for when we enter off a long position. We can look for candle highs as our targets, and it's basically off this wick right here. Or you could be a little more patient and wait for it to hit target. Either way was good, because your first trim was like a 1.5 RR, and it was actually almost a 2 RR, so that would have been nice. And then once we hit this first trim, if we did use the candle high, we could have basically trailed our stop to break even, so to right here, and we never hit that. We just came back down, rocketed up, we never hit that, and we hit our second target, which is right here. And then from there, you control your stop to about right here. At one point, we were 20 points away, or 16 points away to be exact, of hitting it, but we never hit it. Boom, we're fine. Now, top of the block, could be another trim point if you want. And you mark that, and you can take another trim right there. And once it hit that, trail your stop to the bottom. And then your ultimate TP would be this right here. This place we've rejected a lot, and we've even closed below right here. So at that point, you can either get all out or target the top of the block, or if you want to be a little more risky, you can target till right here. So if you enter right here, and for some reason you're still in a position, you want to trail it, not to down here this time, because that's too wide. You want to maybe do a recent low, so right here, and maybe we would have got tapped in, and that's fine. We would have still got 130 points, risking 30. That was still like a 4.5 risk to reward. It's great risk, great reward, and that's the type of setups to look for. You want to look for low risk, high reward. Now let me show you how to hold your trade if you're going short. So say you entered off a short position and you entered right here. Well, your first target, if you want, could be right here, but your real target could be this block right here, and we've hit that perfectly. And say we did hit right here, well, after this, you move your stop loss to break even, and you trim about 40 to 50% of your cons, and you'll still make good money, because it's pretty much almost a 2 RR trade. And you want to target this area. From here on, you can either choose to exit your whole position, or you can choose to leave a runner. The smart thing to do would be to leave a runner until right here, because I've noticed in this area we've bounced a lot before, like right here, and it would be good to take profits. So if you're in a short, you want to technically see where we bounced off of, and use that as your ultimate price target. And you can use order blocks, you can use Fibonacci, you can use FVGs, it doesn't really matter. The point is, you gotta learn to hold your trades. This one would have been quick, close above, long, stop loss at the bottom, maybe 40 ticks, and our ultimate target could have been right here. The reason why our ultimate target's right there is because we're bearish, and you know, I doubt it even goes all the way up to right here, because we're bearish, and I doubt it's gonna pump that much, but that's how I like to look at it. I think a lot of mistake that traders make is they take trades at a 1-to-1, then they see themselves win trading, which means they're just break even because they win, lose, win, lose. When in reality, you can have a 50% win rate and still be up thousands in a week, only risking 300 because of holding your trades. That's the key. And in this market, patience is money, and patience is what's going to get you those goals that you want to achieve. So hope you guys enjoyed this, and if you guys want me to make more videos regarding psychology or strategy, let me know, and I'll try my best to help you out.